Hello friends, welcome back to A to Z Accounting Pro. We are going to restart the lessons after a long period because after the first two videos I have received lots of positive feedback from friends and subscribers here about this presentation. I am a working professional in this field for the last 25 years. Due to job assignments, I was unable to continue the videos for a long time. Now I'm going to restart this with passion. Like I said earlier, here we will be practically doing all the duties of a professional accountant. By saying that, not only theories, but more than that, uh, we will be discussing how those theories are helpful in our daily life or in our job or in our own business or being a professional accountant, how these entries can be done and how we can prepare the complete financial statements. So we will continue our video, and today we are going to discuss about the fundamental accounting categories. What are the fundamental accounting categories? And also we will be discussing about a shortcut to create any journal entries. How easily we can create journal entries. So those coming back to those fundamental accounting theories, they are assets, liabilities, revenue, and expenses. So liabilities, these are including capital. These things we have already discussed, but again, I'm going to discuss one by one. So today we are going to discuss about these assets. What are assets and how we are going to create journal entries in assets. Okay, let's say. So just we have already discussed the golden rule of accounting. This we have already studied earlier, but this is very simple. But again, simplest form to understand better, or there is a shortcut which we have already discussed. But here now today, you can have a clear picture of how to create a journal entry very easily. Okay. So just keep in mind these things, these terms: assets, liabilities, revenue, and expenses. Okay. And now, uh, like we have already discussed earlier, assets, any increase in assets or expenses, any increase in assets or expenses will be debited to those concerned account. Okay. That is number one. Any increase in assets or expenses will have to debit. Okay, so what happened? Any decrease in assets or expenses, automatically it will credit, right? Any decrease. So you just need to remember only this thing: assets and expenses increase, any increase in assets and expenses accounts will be debited. So automatically you can remember the decrease will be credited. And the second thing, number two, any increase in liabilities or revenue. Liabilities, that is including capital. Okay. Liabilities including capital and revenue. So any increase in liabilities and revenue will be credited. So what will happen to the decrease in liabilities and revenue? The decrease and in liabilities and revenue will be debited automatically. So you don't need to increase, you don't need to remember those, but you need to remember 2 points: any increase in assets and liabilities will be debited, and any increase in liabilities and revenue will be credited. So that is the shortcut. So this you can easily remember: any increase in assets or expenses. debit that account. Any increase in liabilities or revenue, credit that account. So how you know which account to be debited and which account to be credited? So if you are an accountant, now you have already understood. But if you are a business person or if you are doing this for personal purpose, maybe you will not understand very much easily. So here I'm going to discuss uh, about how we can easily create journal entries. So these two journal entries we are going to discuss today. Okay. This includes only assets. Okay, only asset account. So first we will be discussing about asset and then we will go to liabilities, revenue and expenses, like that. So first transaction, transaction number one, uh, your company bought a laptop for company use amounting to US dollars 2500. Okay, so being an accountant or being an owner, you got a bill of purchase of a laptop for company use, okay, amounting 2500. How you are going to account this in your books? That is what we are going to discuss. And what are the effects of those entries in trial balance and income and expenditure, um, or P&L and the balance sheet. Okay, that is our topic today. So first, let us read it again. Bought laptop for company use amounting to USD 2500. Okay, so laptop. What is laptop? Laptop is an asset. Okay, what is, how you know laptop is an asset? Because you know, in assets there are mainly two categories: current assets and fixed assets. Okay, so what is fixed asset? What is current asset? These fixed assets are, these are for long term use of a company. Okay, so with these fixed assets we will use those fixed assets to create revenue or to create income for the company. That is the purpose of fixed assets. So here the laptop will be used by the office professionals or whoever to do their work. Okay, but it is not directly involved in production or anything, but this will be used in the company for long term, okay, for his work. So this is a fixed asset. So what is current assets? Current assets are expects to use or turn into cash within a year. Current assets. Okay, so this laptop, we are not going to sell it. We didn't purchase it for selling, but we purchased it for using in the business. So that is why it is going to fixed assets. So current assets will turn into cash because this is for the purpose of selling or using in the business within the coming year. So for example of a current assets, the materials, inventory. So these are all we are going to use it within 1 year, right? So these are current assets. So fixed assets, otherwise in most of the companies, this called property, plant and equipment. These are the fixed assets: property, plants and equipments, the machines, factories, laptops, whatever you purchased for the use, for the long use of the company, that is fixed asset. So here laptop is a fixed asset. So coming back to our shortcut, any increase in any assets or expenses, debit that concerned account. So here laptop, the laptop, you can create an account called laptops. Okay, either laptops or it is up to you. You name the account. Okay, so either it is laptop or let us say office equipment, or let us say generally computers, or let us say IT equipments, whatever. Okay, so that concerned account you are going to debit because there is an increase in laptop. So that is why you are going to debit that account. So I'm here going to write just laptop, or maybe these generally all the office equipments may be debited to office equipments accounts also. So you can you know, it is an optional matter. You can name your own account whatever you want, okay, or because this these are we are now creating the chart of accounts actually, okay. So if you have lots of laptops, I mean, maybe hundreds of laptops are there in your company, so then you can open an account called laptop account. So here, bought a laptop for a company use amounting to USD 2500. Here, the laptop is increasing. One laptop is increasing. So that is why we are debiting the account. Okay, any increase in assets will debit with a 2500 US dollars. So which account we are going to credit? What happened here is a laptop came into the company, but cash goes out, right? Yeah, cash goes out. So cash is also an asset, right? Cash is a current asset that's we are going to use it within this year. So the cash is going to decrease because we are taking 2500, right? 2500 for this laptop. So decrease in asset. So increase in asset debit. So then automatically a decrease in assets will be credited. So here we are going to credit cash, or if you pays by check or online transfers, it will be bank account. Okay, so that will be 2500. So this is the entry. This is the entry for transaction number one, and this is includes only assets, laptop or office equipments account and cash or bank account. Clear? This is the first entry, and now we are going to again we'll go for another example. Okay, this transaction number two, bought raw materials for use in production amounting 50,000 US dollars. So here we have bought raw materials, okay, to use in the production. Okay, what is a raw material? Raw material, that is we are stocking, okay, we are stocking the materials for using in the manufacture or production of company. So after production we are going to sell, right? So these raw materials are our stock, inventory, whatever we call, okay. This is also an asset, but what type of asset is that? Because these raw materials we are going to use it within 1 year, within this year, and this will be converted into finished goods within this year. So this is a current asset, right? So we will debit, right? Debit, because raw materials are increasing here. Bought raw materials, raw materials are increasing. So raw materials account, or let us say here we most of the companies we call it as inventory of raw materials account. Okay, so you name it, and we bought it for 50,000 US dollars. And which account will be credited? Automatically cash is going out, like here cash is going out from the company account or cash, so we have to credit this with 50,000. So this is the two entries. These are very much easy if you remember this shortcut. Okay, now let us move forward. Now these two accounts, I'm not going to show any ledger accounts here. Instead, we will be moving directly to the trial balance. What is a trial balance? Trial balance, here this is an example of trial balance. Okay, trial balance consists of all the assets, all the liabilities including the capital and the revenue, right, and the expenses of a company. So the total balances, total ledger balances of a company called trial balance, all the account balance. all the account balance as on a given date will come here. Okay, account balances, all the account balances will come here. Earlier we have discussed these entries, whatever I have mentioned here. So if you go to my first video and the second video, you can find out more about this. But the same thing we are again we are going to discuss one by one. Okay, now here we have created two more entries here. So these two entries we need to post into this trial balance. How we are going to do that? We will just reflect those balances in the trial balance. So first let us say office equipment account. So let us go to this office equipment where we can see this office equipment account in the asset section, right? So here there are assets account. These are property and equipment. So in this company trial balance, furnitures, plant and machinery, buildings, furniture and fixtures, again furniture and fixtures, tools and equipments, factory tools and equipments. These are IT products. Okay, there is IT products here, so we can book into the IT products, or if you want to change this account name to laptop or office equipment, it is up to you, because you are the accountant, you are maintaining your trial balance, you are maintaining your financial statements, and if the management wanted the other names, you can keep it as it is. Okay, here now I'm going to debit, right? Office equipments debited. So I will go to office equipments. Yeah, with the same amount whatever debited in the debit column, right? 2500. Yeah, so one side of the entry posted into trial balance, and the second cash or bank is 2500. So again it is on the asset side, so this will be bank account. So I'm going to add this 2500 into the balance. So 2500. That's it. The first entry already posted into the trial balance and it is reflecting, and just check because here we have done a mistake. So that is why it is not matching, because it is what happened, because instead of crediting we have debited again. So here it is credit, right? The cash account is credited. So we have to post into the credit column. Yeah. So our TB will match. Then we are going to post again the second entry. So inventory, raw materials inventory. Where is inventory? We need to check the inventory. Here is the inventory account. Yeah, inventory account. And what happened to inventory is inventory is debited. So this is the debit column. You just debit the inventory and credited what? Cash. So you need to go to cash account and credit the cash with a 50,000. So total 52,500 credited to cash, and yeah. So just check whether it is matching. Yeah, the TB is matching. So this is how you are going to create and post a journal entry. So this will help you to understand how and when these amounts affects trial balance and income and expenses, or profit and loss account, and the balance sheet. So here actually in these two entries just now we have created, there are no effects into any other categories of trial balance. It is only going to assets, right? The office equipment, inventory, and the cash. That's it. Three accounts: office equipment, inventory, and the cash. So there is no impact for these two entries in the P&L. Yeah, because these two entries are only in asset side. So we can directly go to balance sheet and check, yeah, the inventories, because this is directly we have linked into the trial balance. Yeah, inventories 325,000, trial balance inventory. Yeah, because 350 minus 25,000 will give you 325,000, correct? And there is trade and other receivables 30,000. This cash and bank balance is still shows 500,000 because we have not linked the credit side. So we need to link the credit side in the cash. Okay. So here now there is a difference of 2,500. What is the why there is a difference of 2,500? So we need to check that. Going back to the trial balance, we need to check there is IT products. So we bought IT laptop for 2,500, which is not yet reflected in the trial balance. So what will happen in the property, plant and equipment? We need to post this 2,500, right? Yeah. So the difference makes zero. 805,000. We have 805,000 assets and 805,000 liabilities after these two transactions. Okay. So friends, that's all for now. Just wait for my next video to know the creation of JVs more easily and treatment of those JVs in the financial statements. And in the next video, we might be discussing about the liability side. Okay. So just now I have discussed assets. So if you have any doubts or clarifications about this, just comment on this video and I will reply to you. If you understand this video, please subscribe the channel and like the video, and also share it with your friends. So this will help them also. Okay. And also, I mean, I don't need to say, we need to grow. The channel also need to grow. So please ask them to subscribe. So this will help me and will help you also. And also lots of friends asked for this worksheet. Definitely I will be sharing the worksheet. It is just for a reference purpose only. But once we discuss the topics included in this worksheet, and this will help you understand better. So I will share it with you after completing these topics. Okay. But for the time being, you just subscribe, like, and share it with your friends and family, so they also will be helpful. And this will help any individual wanted to learn the practical accounting. Okay, not theory, okay, because we have studied lots of theories. So this will help a lot. So let me know your feedback. Okay, I'll be glad to help you. Okay, thank you very much.